Hello, I'm Anmal Sinha, a fixed income strategist at PIMCO. Today, we're going to discuss PIMCO's current outlook on the markets, how global core bonds are still relevant in a low yield environment, and the key benefits of PIMCO GIS Global Bond Fund. Following the longest expansion on record, the global economy plunged into what will likely be one of the deepest, but also one of the shortest recessions in modern times. While the recession likely ended a few months ago, we expect the recovery to pre-COVID levels of economic activity to take some time. Our baseline continues to be for a bumpy and uneven recovery, with pre-crisis levels of economic activity unlikely to be reached until 2022 in most Western economies. To paraphrase a Fed governor, the economy rode the elevator down and is now slowly climbing the stairs back up. One of the key factors to our outlook includes the path of the virus. We continue to monitor the rate of growth in COVID-19 cases and get input from medical experts, including the progress toward a vaccine. In addition, policy and politics will likely impact markets in the months ahead. Fiscal and monetary policy support will continue to be critical to the pace of the global recovery and to investor sentiment more broadly. Overall, we are expecting to be in a highly uncertain environment over the coming months and quarters. It's important to note that while PIMCO's outlook anticipates gradual healing over the next couple quarters, uncertainty remains pervasive. As a result, diversification and an emphasis on quality are likely to be key considerations in building robust portfolios that offer resiliency in the uncertain environment ahead. In this context, core fixed income can be a source of diversification to other risk assets and potentially provide protection on the downside, particularly during periods of volatility. This point was tried and tested during the first quarter of this year, when core fixed income was resilient and helped protect broader portfolios during the downturn, despite the fact that the starting point for yields going into the crisis was already relatively low. So I think that investors should still own fixed income and continue to think about core bonds as a good source of diversification and resiliency within their overall portfolio. In addition, a global portfolio has the potential to offer compelling opportunities with attractive risk-reward profiles, despite low to negative sovereign yields for many sovereign bonds. Actively managed and flexible strategies can also potentially capture diverse sources of return. A global bond portfolio that is broadly diversified across a range of countries, industry sectors, and currencies can help to reduce risk and preserve capital. At PIMCO, we have been focused on how we can deliver the benefits of core bonds to our investors: diversification, capital preservation, and attractive risk-adjusted returns. There are two key ways that we approach these objectives. The first is our focus on active management. We think that in a low-yielding environment, the alpha generated through active management will be increasingly important in driving returns within portfolios. Dispersion across sectors is high, and so selecting which risk to take is critical. In addition, many indexes reflect less attractive dynamics given more and more sovereign debt, as well as corporate credit that has not only increased, but also at longer maturities, meaning more interest rate risk, more credit risk, but all of that for less and less compensation. With its actively managed approach, the PIMCO GIS Global Bond Fund has consistently outperformed its benchmark, as well as a broad universe of fixed income competitors over the past 10 years, and has been able to navigate various types of market environments, including periods of market stress. Second is our emphasis on sourcing a diversified set of alpha opportunities. We have a robust risk management approach to help determine sizing and scaling, and in incorporating our best ideas across multiple economies, yield curves, and credit environments. These include investment themes related to how much rate sensitivity to take in each country, relative country selection, curve positioning within the different regions, sector and name selection, and even analysis at the instrument level to choose the most efficient and effective way to gain exposure. As a result of this diversified and flexible approach, the fund has delivered strong performance across different time periods. Through PIMCO's 30+ years of experience in managing dedicated global bond strategies, our investment philosophy remains the same. We aim to deliver outperformance and resiliency in volatile environments while diversifying clients' other investments, such as equities. The PIMCO GIS Global Bond Fund has consistently delivered higher excess returns and better risk-adjusted returns, ranking top quartile within its Morningstar category across 3, 5, and 10-year time periods. In an uncertain and low-yielding environment, the PIMCO GIS Global Bond Fund is a time-tested and high-quality portfolio anchor that can provide solid returns and a potential hedge against volatility in other asset classes.